Well, all right. Another Monday, another wackadoodle market update coming your way. This one's super interesting, so you're going to want to pay attention because it's about these darn tariffs and trying to make some sense of some of these things. So, here's what we're in for. Whether you're a home buyer, a home seller, or a real estate professional, tune in. Here we go. All right, so on the books for this week, kind of tongue in cheek here, but I mean it. Nothing else matters, like the Metallica song says. Nothing else matters except for absorbing these tariff wars and figuring out what's going on. Sure, we have initial jobless claims that are going to come out on Thursday, the CPI and the PPI, and normally I'd mark those in red. Excuse me. And they are important, but they will take a complete and total backseat. As a matter of fact, inflation is probably going to end up lower this week than what it is that we're anticipating because it hasn't absorbed any of the tariff information yet, right? So reciprocal tariffs that are going to be higher will start at 12:01 a.m. on Wednesday. They're set to start at 12:01 a.m. Wednesday. Um, what's interesting to me, and it might be interesting to you to know, is that we are in a place where consumer sentiment, take a look at this chart right over here, is sitting at the lowest that it's been since 2022, November. But probably the more concerning piece for me here is that it's sitting at the lowest that it was, same levels as the recession in 2007, 2008 over here, right? So there is a fair amount of opportunity in this, and hear me out. Um, if you are a person who is tied into the stock market for your pay, so many of our tech folks that get paid with RSUs and things of that nature, it's understandable right now. I mean, we're all panicking and looking at the stock market that is bleeding and falling off the cliff. But a lot of folks, their compensation is tied in directly to that stock. So if they're most likely going to pull the reins a little bit and maybe step back a minute and let things get settled. This may present itself for opportunities to those of our viewers who are W 2 people that their compensation isn't tied into stocks. And this may represent a great opportunity to go out there and buy a home. Rates are still decent, and sellers, if they're seeing a lack of buyers, are going to probably be in a situation where they might be open to different offers and or lowering their price. We don't know what we don't know yet, but that's worth considering. What am I expecting this week? Normally I would pontificate my thoughts, but you see question marks there. I have no idea. I don't know what's happening. I don't have any clue as what's going on. All that I know is that we're all in the same boat and we need to sit still for a minute here. Quick word to the wise. I'm not your financial planner. I'm not your financial advisor. But here's the thing. In markets like this, because I've seen so many markets where recessionary periods have started just like this, unless and until you absolutely need the money out of your stock account, out of your 401k, leave it alone. Leave it alone, let it do its thing, and it will ride itself back up, right? To sell right now when things are down this much, probably not the greatest idea in the world, especially if you don't need the money. And always remember what I tell you for housing market and for stock market, the Hall of Fame of people who've nailed it exactly at the right time is this many. So don't put yourself through the stress. Listen, a lot of calls regarding these tariffs over the weekend about, hey, how does this work and what is this? I'm going to give you a real quick high level overview here, okay? Administration came up with this fancy schmancy little uh, graph here, this formula that they've used. I'm going to break it down for you real quick. So all that they're doing is that they're grabbing the total exports, minusing total imports, and then dividing into total imports. So basically dividing themselves into one, essentially what they're doing. So that math works out. If I take their exports divided by the imports, it shows up exactly at 67%. And they took half of that and they said, okay, now the tariff's at 34. Okay? So this is the way they figured it out. Not a whole lot of common sense to it. At this point, we are not behind the wheel, so we are going to have to sit in the back, put on our seatbelts, and go for a ride. But don't get yourselves too twisted up about these things. They tend to work themselves out eventually, I hope. All right. The bond market was the recipient of a lot of money from the stocks last week. You can see it over here. Look at that. We just build up. It was beautiful. And then today we gave it pretty much all back, 62 basis points down, and still free falling as we speak. Stocks are in that same kind of tumble down. So at the end of the day, this is why you need professionals on your side who can help you understand what's happening and then really tell you when it's time to take the money off the table and lock yourself in. A lot of our clients locked in last week. Some of them didn't listen, and now unfortunately they are what they are. But important to note, and the reason why I'm telling you don't freak out. Last week, Monday, you were at 6.74. Today, they're 6.75. Obviously, there was a lot of opportunities in the middle to lock in for lower, but week over week, it's pretty steady. So this thing gives and it takes and it gives and it takes. Okay. Hope you found that helpful. Hang in there. Everything's going to be okay. I think, I hope. And at the end of the day, these economies always will go up and down. And this is just one of those roller coaster rides. Okay. Take good care of yourselves.